Hey everybody, how's it going? How was your day today? From what I could see, some of you guys had some pretty good trades today. If you were patient and waited, a little bit later in the day when things started waking up, you guys did good on those tickers. Oh, let's see. All right, can everybody hear me? Is the audio good? I want to make sure we're good before we get started. All right, awesome. All right, so we're going to talk about planning your trade, and this is something that a lot of new traders don't do. So it's something that they skip. A lot of newer traders, they want to get alerts. Whoever they're following, they want to know when they get in, where the targets are, but they don't write it down. I mean, it's fine if you are following somebody and, you're trying to learn a strategy, but you really need to write it down in the form of a plan. And it's a skill that we have to develop. It's a much needed skill. There are two types of plans. There's a trading plan, which is like a business plan. Our business trading plan, which is, encompasses everything about our trading and how we're putting our business together. Because you remember, this has to be run like a business. If you're looking to make money doing this, have to run it like a business. If it's a hobby and that's all it's going to be to you, don't trade with your money. Trade in a simulator or something. Don't waste your money because you're going to lose it. If you treat it like a hobby, it's going to be a hobby. So we have to put that time and that effort in, and we have to develop the skills that we need that's going to help us get to that next level. So I know all of you guys have heard, this old adage, failing to plan is planning to fail. And that cannot be any more true both ways. Whether we fail to plan for our business or whether we fail to plan our trades. Now today we're going to talk about planning the trade because it's very important. I know there are parts of our overall trading plan that we need to do up front. And I shared all of that in the small account videos that we do. I think it's probably the first or the second one, or in the first and the second small account video. So if you haven't seen it, then I would suggest going back and reviewing those, because we're going to be building on that plan, here this quarter, because the goal is to finish this quarter strong, develop all of the skills and everything necessary so that we start 2018 running and we're not going to look back. So this is the time to develop everything. The market is tough, especially when you're trading with a smaller account. Very tough. There's a couple of seasoned traders I know that are, starting and trading small accounts. And they're like, man, this is ridiculous. It's hard. It's not that it can't be done. It just takes a different level of discipline. And planning is going to be paramount to you surviving, this phase in your trading career. Now, I shared this with you last week, and I'm going to keep sharing it with you. Failure is not an option here. We do not look at failure. The only reason it's a part of my vocabulary is so that I can tell you that it's not an option. Because like we said, there's no button that you push. There's no key on your keyboard. And there's no checkbox to determine whether you're going to fail or not. It's not an option. So whatever I need to do, whatever I can do to help you guys out, that's what my job is. That's what I'm here for. Because I don't want anybody to fail. I don't want anybody, saying that they couldn't do this, but they didn't give it their all. And if it's something that you really, honestly, and truly want to do, you can do it. It may take you longer, but you just have to be smart about it and not throw all your money away. You just have to manage yourself until you develop the skill to get there. I mean, it's just, it is what it is. So you got to put in that work, got to put in that time. And, I'm here to help you. So why plan a trade? When you're looking at a career in day trading, whether it be a part-time career or a full-time career, it doesn't matter. This is a career, where your personal decisions, the decisions that you make, translate or results into profits or losses. So having a well-outlined, easy-to-follow plan can make the difference between success and failure. And we're talking about individual trades. That's what we're going to be working on. And I'm going to show you how I plan my trades every day. Every trade I take, before I get in it, I've got to have a plan. That's why I miss trades sometimes. Because if I don't have a plan in place, I'm not clicking that button. And it's just not going to happen. So having a plan to be successful really in anything you do is recommended. But trading the market without a plan is, it's a recipe for disaster. That's where you're going to start running into failure. And for us, like I said, it's not an option. Yeah, I'm recording it. Okay, having goals set in advance, having your trading goals for your individual trade in advance, knowing when you're going to take profit, knowing when you're going to stop out. It's all part of successful trading. A successful trade is when you follow your trade plan and you execute it flawlessly. That's a successful trade. Just because you made money doesn't mean it's a successful trade. If you made money and you broke every rule in your book and you got lucky, that's not a successful trade. You're setting yourself up for failure in the long run, because this business and success in this industry depends on your discipline, depends on you following your rules and executing your trade plan. Virtually every successful trader in the market depends on some type of plan or guideline for their trades. Now, yeah, some of these larger companies, they have their automated trading. It's already built in. They don't have to think about it. It's automated. For us, and I think what gives us an edge is that we can, we're not automated. we can assess the situation and we can look at things in a broader perspective than a computer can. And that, I think that gives us an edge sometimes if we're able to manage our emotions and keep our head in the game. Having a trading plan before starting to trade is kind of like, somebody that's just taking a trip and you got a map. Now, we don't use maps anymore. We use GPS. When I first started traveling, we didn't have GPS. We used maps. And then when the GPS came, I didn't trust it because I always had to verify what it was telling me with the map. Now, I don't even own a map anymore. It's all GPS. And if you don't type in where you're starting and where you're going, and you don't get the directions and make the right turns to get there, you probably won't get there. And it's the same way with trading. We're not going to get in the car and go anywhere and say we're going to another town or another state and we don't have any idea where we're going. We wouldn't do that. We need the GPS to tell us where we're going, what turns we need to make, and everything. When we were coming back from North Carolina the other weekend, there was like 5 accidents on 95 that had the highway blocked completely. So our GPS told us, where we needed to detour so that we wouldn't be stuck in the traffic on the highway. And, you got to trust it. If I didn't trust it and I deviated from it, I might still be stuck on the highway. It's just, when you do your trading plan, you got to have and you got to develop that same confidence that I had to develop in the GPS, that it's telling me where I need to go, and that it's giving me the best route so that I can get to my destination with as little pain and uncomfort as possible. And our trading plan is going to do the same thing. So when you go to the market and you start trading or take a trade without a plan, even if you've experienced, you've been trading in the sim and you feel like you're experienced, it's a whole different ball game when you got your money on the line. A whole different ball game. Yeah, Waze is awesome. I didn't, that's something I didn't know about, but we I'm glad my wife has good friends. Yeah, whole different ball game when SSR is on. Guys, you in a simulator, you can't simulate SSR. No, you can't. So, and there's a lot of things that you can't simulate. That's why when you're trying to follow somebody, let's say you're in a chat room, and I can name 5 or 6 people, not anybody in particular. If you're trying to follow and do exactly what they do, and they're not live, they're not going to have these issues. They're going to be able to get in and out effortlessly. And you're sitting here trying to figure out, well, how in the world did they do that? I tried to get in with, 200 shares and I couldn't get in. These are the problems that you run into when you're running from a simulator to trading real time, trading live. And you have to be ready for that. And without a trading plan, that's why I say you can't just follow people. You got to have your own trading plan. If they lay out a trading plan for you, like a lot of these guys do in these chat rooms, they tell you, this is where I want to get in, this is where I want to get out, these are my profit targets. It doesn't matter what they're trading in. It doesn't. You need to write down that trade plan, and if it makes sense to you, if you can look at it on the chart and it makes sense to you, then you should be able to trade it. You shouldn't be able to look and try to follow what they're doing. So you gotta have a trade plan. The objectivity and the clarity that a good trading plan gives you is going to help you when you make these decisions. Because like I've said this 1,000 times, learning the fundamentals and identifying the setups, easy. It's so easy a caveman can do it. What happens is when we try to execute, all hell breaks loose. And we don't know which way is up. And that's where the problem comes in. That's where the psychology, and that's why I say trading is 80% psychological and 20% fundamentals. So the main advantage of having an objective and well thought out trading plan, what it does is it gives you more confidence. Now let's go back to the simulator deal again. Let's say we're trading in a simulator, we're practicing, we're learning this strategy, and we practice writing out our trade plans. And in the simulator, we practice, following our trade plan to a T. When the entry sets up, we get in. We automatically know where our stop's going to be. We know where our profit targets are going to be based on the chart. And we've got all of that in front of us. And all we have to do is read and follow our trade plan. That's it. It takes all of these crazy thoughts and trying to figure out, well, is this right? Is that right? All of that is out the window. It's out the window. As long as you wait and you get in when you're supposed to. Now, my biggest issue, and the issue I had today, was, I just want to get in. I hadn't traded really in several days. I was just itching. I just had that itch. And so whenever you have that, the day's going to start out not so great. I brought it back around, but the fact is, I didn't really wait until my trade plan activated. I got in before the plan, and once that happens, you have no plan. You might as well not even have a plan. And then that's when things go wrong. You start thinking out loud. You start trying to make different decisions. Your trade plan's out of the window. And then things tend to end wrong for you, end bad for us. So, we want to be able to have confidence and trade with less emotion. We need emotion. Our emotions is what protects us and keeps us safe. But we have to learn how to manage them and use them in a way that's beneficial to us and not let them, prevent us from making money. And that's what the trading mindset workshop, that's what we're doing, for you guys that signed up for it on Thursdays. Everybody that takes the classes, this is part of the class. That's how important I feel it is. You guys that signed up for the fourth quarter with us, You got that. We're going, you're getting it. All you guys that mentor with me, you get it, because you got to have it. Without understanding the right mindset that you need, you're going to continue to be lost if you hadn't figured it out already. So, again, the market doesn't play favorites, even though we may feel that way. We may feel like we're the low men on the totem pole, but in reality, the market doesn't play favorites. And it could be equally unforgiving to everybody that's in the market. So, if you have a proven trade plan and you stick to it, you're gonna survive. And the people that don't, the people that are going from place to place, chat room to chat room, the people I say have the backpack mentality, those who like to pack their bags, 10, 15 minutes before the bell rings and they're ready to run out of class before it's actually over. Those with the backpack mentality, those are the ones that don't survive. Because you can't develop moving from place to place. Once you start trading. Now, if you're trying to learn and you're still paper trading and you're trying to find your place, that's fine. You're going to need to try different places. You're going to need to figure out where you fit in. But once you make that decision, you got to stick with it, and you got to see it through. Overall, a good trade plan is going to help you. It's going to help you identify your goals, where your stop's going to be, where your profit targets are going to be. It's going to help you organize the technicals that you have looked at on the chart. And it's going to tell you when and how you execute the trade. It's going to help you manage your emotions. And more importantly, your risk tolerance. Managing your risk, nothing is more important than that. We're going to talk about that here in a second when we start looking at this trading plan. The rules that we set, help us keep our psychological and our emotional responses to trades at a minimum, to where it's not affecting our decisions negatively. One sign of a successful trader, it consists of a level, you see him having controlled attitude, level-minded, controlled attitude, regardless of whether the market is going against them or not. I'm an emotional person. Sometimes I wear my emotions on my sleeve, but I don't let it control me. If I have to take a walk, I take a walk. If I have to ride my bicycle around the neighborhood for a little bit, that's what I have to do. But you have to maintain a level head. You got to be calm, cool, and collected. And another part of the workshop that we're doing, it's going to help you identify when you are losing control. You're going to be able to identify early enough before it gets you into serious trouble, and how to handle and deal with those situations when they come up. So a real trader is going to be composed no matter what's going on. Common human emotions like greed, fear, and hope, it can cause serious trouble when trading. And you got to deal with that the right way. And you got to have a good way to manage it so that you won't, be part of that 90% that doesn't make it. I think I said yesterday, if this was easy, everybody would be doing it. Everybody would be wanting to stay home, spend more time with their family. If they could come click some buttons on the computer for 40, 50 minutes or a couple hours in the morning and then go. Who wouldn't want to do that? But it takes work, and it takes understanding these things, and part of our job as a trader is to build a trade plan. Now, what I do is I use just a regular index card. It's a little bit oversized. I can't say a regular index card. Mine it's an oversized index card. And on that index card, I'm going to have one filled out for each ticker that I have on my watch list. So this morning, RXDX and SPPI, those were two that, I had trade plans set up for. So the first thing I'm going to write down on the card, what strategy am I looking for? So obviously, if it's pre-market, I'm going to write down, pre-market, VWAP rejection, 20 EMA rejection, whatever strategy I'm trading, that's what I'm going to write down. If I'm working with the stock at the open, I'm going to write down the 5-minute opening range. At this point, I don't know if it's going to be a breakout or a breakdown. We don't know yet. So I'm going to write the strategy, the ticker, the entry price. You can't figure out until it actually happens. And the reason why I have it written on here is because I use this card when I'm doing my journal. And that's another thing that we're going to cover in one of these classes. We're going to go over step by step how to write a journal. Because I'm telling you, once you get this reflection down at the end of the day, you're going to see remarkable improvement in your trades. Now, they're not going to be perfect. No trade is ever perfect. But you're going to improve in your consistency and your management of trades. So this is one of the biggest steps in beginning your trade journal as well. So also, you're going to need to decide up front what your position size is going to be. Here we're doing this pre-market. So we have all the time in the world to write this stuff down. Okay, you get faster as you get better. But we're doing this pre-market. So we have plenty of time to figure this stuff out. So we're going to do position size, and once we do position size, based on what our max loss is per trade, I kind of blew that up today. I would have made money today if I had stuck to my max loss, but I couldn't remember what button it was or what key it was, and I'm gonna have that stuff written down. But instead of doing the 100, instead of doing the one for like 20 cents, I did it for 30 cents. Or for 15 cents, I did it for 30 cents. Something, whatever. I was hitting the wrong one, and and my stop was a little bit too far. But you're gonna know what your stop is based on your position size. So if my hard stop is $50, and I go in with 300 shares, then I know my stop can only be 15 cents away. Now, if the stock is moving in 30 or 40 cent candles every 5 minutes, I can pretty much guarantee that if I go in with 300 shares, I'm going to get stopped out. So right then and there, you've got a big discrepancy in your trade plan. So now, instead of going in 300 shares, you probably going to want to go in 100 shares. and allow yourself 50 cents. That way, you're less likely to get stopped out, on your hard stop, which is your max loss stop. Okay, the next stop is the technical stop. The technical stop is the technical level that I'm basing the trade off of. So if I'm trading the opening range, then if I'm trading an opening range breakout to the long side, my technical stop is going to be a candle to close below the opening range high. If I'm going short, my technical stop is a candle to close above the opening range low, or the 5-minute opening range low for me. So I've got a hard stop in to protect me in case the trade gets away from me. When you're new and the trade pops on you, sometimes you get that deer in the headlight look. And while you're sitting there trying to bring yourself back to reality, the stock is still going. And you're going further and further in the hole. So my hard stop is there to protect me from myself and to protect me from the market. The technical stop gives me back the power and the control over my trade so that I can control my stop if technically the trade doesn't make sense anymore. That's the difference between the two stops. And then the profit targets are going to be based off levels on the chart, technical levels on the chart. That's what we're going to look for. So now let's take a look at a chart here. And we're going to take a look at a couple of charts here. All right, so I need a 5-minute chart. My mouse is a little finicky right now. All right, so let's look at RXDX. So let's go over the plan on it. Now I'm gonna move a little slow because screen share, it takes a little while for this screen share to catch up. On the video it's immediate, but I gotta wait for the chart to load on screen share. Alright, so RXDX. Let me blow this up. So we're just gonna look at starting at 9 o'clock. Alright, so it's 9 o'clock. I've already picked the stocks on my watch list. Okay, so RXDX is on there. So the first, let me get a card here so I can write it down. So the first thing I'm going to write down is the strategy. What's my strategy? Opening range, ORB. And I just write ORB 5. That's my shorthand for it. Okay, then, really? All right, then I'm going to write down the ticker, which was RXDX. All right, the entry price is going to be determined. The position size is going to be determined by the price action. So let's take a look at the chart here. And what I do is I kind of go back and I look at the last 5 candles. Okay, this candle had a range of 50 cents, 29 cents, 55 cents, 49 cents, and then this one was 20 cents. So 50 cents would be a good a good range, for my hard stop. So hard stop, I just write down 0.05. I mean 0.50, which is 50 cents. So what that means is, as soon as I gain my entry, I'm gonna add 50 cents to my entry price, and put that as my hard stop. Now, I know the market makers seek out stops. I know we know what happens. But we got to understand that we are beginners. We're just learning this. We do not have the skill or the discipline yet to stop out when we need to. We don't have the ability to read price action well enough to know when a fake out is coming. Now, when I see it, I try to alert you guys. But as a rule, when you're learning, you don't want to try to do that. You want to make sure you're protected. You're trying to grow your account. You're trying to stay in the game long enough so that you can, make a decent profit. That's what it's all about. So you have to protect yourself. You have to have your, that max loss stop in place. Okay, technical stop. I can write, ORB, but automatically I know if this is an ORB what my technical stop is going to be. But sometimes I'll jot it down, whatever, depends on how fast the stock is moving. I may jot the price down of the opening range low or the opening range high if I'm looking to go long or short, because that's my technical level, whatever that level is. If there's a VWAP or 20 or something nearby, then I'll use that. But for the most part, my technical stop is going to be on the 5-minute opening range. It's going to be the high to low depending on where it goes. Okay, now my profit targets. Now we all know that stocks can take off and move in the last 30 minutes and just take up whatever range we had planned for it. Like right now, my bias on this is going to be short because look at where we're trading. We were above it, then we lost it. And, we're selling off. It's 9 o'clock. So at this point, my bias is going to be to the short side. So before I move that, so what I'm going to do is first target would be 1669. And yeah, we can take this out, pre-market. If not, I can quickly change it closer to the open. But the key is I've already got everything down. Okay, Norman, I'll go back through it here in a second. The key thing is I've got these levels written down as profit targets. So here's 1669 would be my first one. The second target, at the time, this was, okay, here, this is the 200 EMA, this is the 200 SMA. I've got this on my chart because I'm, trying to track some data on this. But I use the 200 EMA for my targets. So the next target I saw was $14.99 or say $15. Now that's $1.69. So for my second target, I'm going to look at what's a legitimate area that this stock may hit and try to bounce off of. So from here, I would say 16 Then I would go 16, 1550, and then 15, which puts me there. So my profit targets now will be 1669, 16, 1550, and then 15 would be my ultimate target. Now, obviously, I'm not going to scale out 4 times with 100 shares. I may split it up. So what profit targets I use is going to be determined by my entry point. That's what's going to determine what profit targets I use. Now, likewise, I'm going to go, I'm going to put another set of numbers down for if it happens to set up long. So I'm going to put down 1747, 1797, 1750, and then 1880. That's going to be the second set of numbers for my profit target. So I'm going to have targets whether we go short or go long. Now the first is going to be my bias. That's going to be what we went over first. The second targets is going to be, okay, if it goes the other way, these are my targets. So now I pretty much have a complete trade plan. All right, so before I go on, I'm gonna go back over the hard stop and technical stop for you. Okay, before we take a trade, before we even start our day, we need to know what our risk is gonna be. You know, how much of our account are we gonna risk that day? For me, if I'm starting with $1,500, I'm comfortable risking 3% or so per trade or per day. Okay, so that's going to be, I'm comfortable risking 3% of my account per trade, which is going to be about $45 to $50. Okay, and plus I'm only going to risk 10% of my account that day, meaning my max loss is $150 overall, and my max loss per trade is going to be $50, which means if I lose 3 trades and I get stopped out on my max loss 3 times, I'm done trading that day. And everybody, before you start trading, you've got to have that number in your mind, because what this is going to do is if you have a bad day, it's going to keep you from having an even worse day, and it's going to keep your account capitalized so that you can make it through a week at least. You know, that's kind of what you got to do. You can't prepare for trading real money, but practicing making your trade plans in the simulator is going to help you. And it's going to help you make that transition a lot more seamless. Because instead of you thinking about money, you're going to be thinking about hitting your marks and your trade plan. And that takes a lot of that mental stuff out of you. All of that junk out of your mind. All of that noise dealing with money is not going to be there. But so I know I've got 50 cents that I need. I know I got $50 max loss. So what position size can I trade? I know this is an $18 stop, but my max loss is $50 regardless. So what would be my position size that's going to allow this stock to have enough room to work? I've got to look at these candles, and I got to average these candles to give me an idea of what the swings are on this. So, this is, and I'm not going to spend a whole lot of time doing it on a calculator. I know this is 50, this is 29, this is 55, this is 49, and this is 20. So I know the average on this is going to be a little bit less than 50. So if I give myself 50 cents, that's going to be good. It's easy because it's a whole number. I don't have to think hard about, how many shares I can take that'll give me 50 cents and stay within my $50 max loss range. So let's just, for the sake of argument, let's average these up. So we had 50, we had 29, we had 55, and we had 49, and we had 20. So I divide that by 5. Okay, 40 cents or 41 cents. So 50 cents will put me well within that range. And I'm using whole numbers because it makes it a lot easier to add. You're taking a lot of stress out of you. And, you're good to go. So that's going to be your max loss stop. So as soon as you enter in your trade, you're going to add 50 cents to your max loss. You're going to add 50 cents to your entry. And let's just say, for instance, you entered it at 17.54. You're going to add 50 cents to your entry, and your hard stop is going to be at 18.54, which is right up here. This gives you more than enough room to allow this trade to work because your stop is over all the moving averages. This stop would have to blow through all of that just to take out your hard stop. Now remember, it's your hard stop. Let's say our technical stop is going to be 17.97. Now, when we get a candle to go up and close above 17.97, and let's say the next candle opens is around 18.15, that's when you need to get out. Because technically this trade doesn't work anymore. We based it off of this 17.97 level. The stock bounced, it reclaimed this level. That means our trade plan is dead. Let's cut the trade. That's your technical stop. That still gives you control over your trade. You're not sitting there feeling like you're at the mercy of the market. You do have some control over your trade. You have your stops, and then you have your profit targets. So when you get in the trade, your first profit target is probably going to be this 1667, 1669. Next profit, 16. The next profit's probably going to be 15. Or if you're only going to scale out twice, once here, and, take it off here at 16. Now you can do what I did and try to reset and catch, under 16 and catch the next profit targets. You can do that, but the first trade is going to give you the best risk reward. It's going to be, you're going to have a higher probability of that trade working versus the second trade. Even though the second trade would be solid, it has less chance of working out. So that's the difference that you're going to have between a hard stop, which is going to protect you against a stock that's running away from you, or your technical stop, which is the technical level that's going to tell you that your trade is not working, that your trade plan is dead. Anytime your trade plan is dead, the trade is dead. So you take it off and you go on about your business. All right, so we've got all of this done. We got it all in place. We got our trade set. All right, so let's keep going. Okay, market opens. And we make this big bounce. We put in this crazy candle. All right, we can't let this candle really mess us up. We just need to look at what this candle is doing so we can determine where we're going to trade it. Okay, when this first candle prints, a lot of times it'll put in the high or the low, and then it starts trading in the middle. You can get a head start and mark the high on here, which is 1830, and the low is 17. So this first candle that opened gave us $1.30 range, way more than the 50-cent range that we're looking at. But this is the open. It's real volatile, and you're gonna have a candle that's probably gonna trade twice or sometimes 3 times what the average has been coming into the open. So that's not a big deal. You just want to note the high and the low and where the moving averages and VWAP are in relation to this. And we're looking at our levels. All right, so the next candle prints and we're looking to get in. Now for me, I'm looking for an opening range breakout. If I'm looking for a breakout, it's got to break out over the high of this candle, which this study, the yellow line here is the high, the red line here is the low. So this study marks the high and low of the first 5 minutes. As long as we're trading in this, I don't want it. I don't want it because that's not my setup. Now, yeah, there's a strategy that you can trade the VWAP rejection. But what I get concerned about is the 20, the 9, this level, and then we have this level. That's what I'm concerned about. So what I'm going to do is wait for my setup, allegedly. It doesn't always happen, but the point is I want to wait for my setup. I've got my trade plan. I know what I'm trading. The opening range. The 5-minute opening range. So I have no entry unless the stock gets above or below the 5-minute opening range. So I'm still waiting. Now this candle sells off. Awesome. Yeah, this would have been a nice trade on this, rejection here at VWAP. But again, that's not my strategy. It's a little bit more risk than I like to take. Some of you guys took it and you profited on it because you got in, you hit the first profit target. Nice. Okay, I waited to the next candle and tried to get in. That's when I realized I didn't have my platform set up. I didn't have my account number in it, so it wouldn't fill. But by the time I went and figured out and used hotkeys, I got in a little bit late, was able to take profit at 15.50. So when I got in, my first target I ran to was 15.50. 16 was too close, or I got in right around 16. So the first target was 15.50. The next target was going to be 15, which was right around where this 200 was. But it didn't make it down there. You see, it actually bounced off of the 200 EMA, which I don't use, but I am tracking how effective it is now as part of my back testing. So I've got it on this chart to tell me. And in this case, this stock respected the 200 EMA. So a check for that. But I couldn't take profit here because I had taken profit at the 50 level, which is what I was looking for. And at this point, once I take profit, my stop automatically goes to break even, so that if this stock turns around like it did and starts grinding and gets away from me, I'm going to stop out at break even. Okay, also my technical stop is going to change, because now once a trade starts working, my technical stop is going to be the 9 moving average, or whatever moving average is closest to my trade. And once it goes back and it closes above it, trade is dead. Why let it sit and wait and stop you out? If you're using the 9. I think in this case, I used the 20 and it turned out to be a bad idea. Because we never did get anywhere, ended up having to stop out. But the key is, because I had a trade plan, I knew exactly what I wanted to do. And even when I missed my entry, I was able to get in under another target and then take some off at the next target. And so it gave me confidence in the fact that I know I've got a plan. I know this works. The market may be soft. It may not be giving me what I want or the big moves that I want, but I know the plan works. I know the setup works, and I'm going to trade it. And that's what I did. I traded it, got half the move, and took the rest off. This one stopped me out at break even. Really because I had a bad entry. That was the main thing. If I didn't have such a bad entry, I wouldn't have gotten stopped out when I did. But that's part of trading. All right, let's see. There, RXDX. No, it's not a problem. It's not a problem. But my entry wasn't, just because it was 70 cents away from the 200, that's not a big deal. It's gonna, once it starts down, it's gonna gravitate to the next support, albeit the $50 mark, or here in this case it was the 200 EMA. But whatever it did, it gravitated to that next support. All right, so does how I plan my trade make sense? You got plenty of time to do it pre-market. That's why I have my watch list done by 9 o'clock, so that I have time to do this. Now it only takes me a minute or two to write this down. Once you do it so many times, it just becomes second nature. Now what the challenge is doing this while the market is open. That's why I don't trade fast moving stocks. That's why after the market opens, I'm trading trend continuation, which means I'm already going to have profit targets laid out. And if anything, I have to go and find 1 or 2 more, which doesn't take long, but I'll already be in the trade. So, finding another level under the first profit target won't be an issue. But everything else will be in place. On reversals, the same thing. It may take a little bit to get used to it, But once you do, I'm telling you, it's gonna help your trading. It's gonna help your mentality and your focus. Because instead of worrying about everything else, all you're gonna do is worry about hitting your targets. And that's key. All right. And you can put whatever. This is just what I do. You can put whatever on it. Now, after the trade or even during the trade, I will make notes on this card so that at night when I do my reflection and I can't remember everything that happened on that trade, I got it right here. I've got it written down right here. Any notes, any strange thing that happened that I saw on level 2 or whatever is right there. Because what I can do is go back whenever I get a chance or whenever it loads in Thinkorswim, like maybe 2 days later, I can go back and look again and see, did I actually see this, or, how can I predict this? Is there something that gave me a signal that this is going to happen? And all of that. That's why I say you got to put the time in. It's not easy, but when you get it, you don't have to do this anymore. All your time will be spent, focusing on your trades. No, I can use the same card. Because what I do is I'll draw a line down the center. I'll just draw a line down the center and use it again. The notes I put on the back. I don't write the notes on the front. So, I've been known to do, use this card 3 times for the same stop. Yeah, you don't want to do, and that's kind of why I started using the oversized cards. Because with me, when the market was good in 2015, just about every stock I traded in the morning, I had 3 trades on. I traded the opening range trade, I traded the bounce, and I traded the continuation, whether it continued down or back up. And I would do 3 trades on one stock. And that would be my day. And we might have done that 10 times this year in chat. If 10 times. The market was not giving us the follow through that we wanted. All right, I'm glad it helped. I am glad it helped. So, final thoughts. And I can email you a picture of the card. Just send me an email so I can email it to you, so I don't forget. I get a whole lot of emails. All right, so to sum this up, many traders have lost their entire account because of their lack of discipline to following their trade plan, or not having a trade plan at all. Like I said, a lot of people come into this just wanting to follow somebody successful. This guy's making a couple $1,000s a day. If I just follow what he's doing, I know I can make $500 a day. That's as false as a statement as you'll ever hear. You have to have your plan. Once discipline is lost in trading, then you're going to be much more likely to be too emotionally involved in the trade. And that's when these devastating losses happen. So the best chance of success when trading is to be prepared before you get in a trade with a plan. You have to plan them objectively and proceed to your trade plan as strictly and calmly as possible. The benefits to having an objective and a proven trade plan, it can more than compensate over the long run, for the time it takes you to develop. You'll be able to test and implement, and you'll see when we put this together, we're going to finish up next week, with some key things you want to look at in planning a trade, money-wise, and how we start using it as we reflect on our trades for our journal. This is going to continue to go until we get to the end. Because every trade you take, you should have it documented, and you should learn something from each trade. What not to do, what to do over and over again if it worked. There's no shortcutting that. No shortcutting at all. So anytime you ignore your trade plan, it's probably because you want more money. Or it's going against you and you don't want to take a loss. Or it may be your third loss in a row and you can't trade anymore, so you're just going to hold it and see if it comes back. All of those things are detrimental to you. So the reason you have a plan, a written plan, is so you can follow it. If it's in your mind, then you can convince yourself to hold longer either way. But if it's in writing, it's in front of you, and you're reading it throughout the trade, you're more likely to, follow that plan. And, for me, that's what worked for me, and that's why I do it. All right. Any questions? So I don't know if I explained it well enough or I put everybody to sleep. I don't know. But I try not to preach today. I review my journal every night. Every night. When I trade. Obviously, if I don't take a trade, then I don't. But every time I take a trade, I have to document it and I have to journal it. It's going to be a little bit harder now because, I was advised not to connect my account to Profitly. So, it's going to be hard. I was sitting here talking all this junk about not wanting to crunch numbers, but I'm probably going to have to do that to be on the safe side anyway. But it's good because you guys will see every trade I take, so there'd be no question about whether I took it or not. Yep, the recording is going to be up. I'm actually going to make this first one public. So, people that ask me, can they come try it or whatever, they'll be able to see just what we do every Wednesday. But the other ones is, you're going to continue to get them in your the private folder on YouTube. And if I ever get my new website that I've been working on since February, then I'll have a place where you guys can log in and you don't have to deal with different links to the videos and all that stuff. All right, so I'm going to stop the recording here. The journal is extremely important because it's part of the review process. It's part of the review process. Email me, and I'll talk to you about it. It's part of the reflection process. The way we learn is through reflection and reinforcement. You know, we do the same things over and over again. Like in the military, you know, every day we would have reinforcement, reinforced everything that we learned and did it over and over and over again because it became, you know, second nature. And when we made a mistake, we could learn from it and know not to do it again. And we just kept doing that. So in trading, it's kind of the same way. The same way I taught my students. You know, they didn't like it at first, but then they realized it made it a lot easier for them to learn. When they went back and they wrote down and they reflected on the job they did, the problems that they ran into, what they did to fix it. And you know, once they started seeing a pattern and they realized it works, and it worked wonders for me in trading. It took me a while to connect the dots, but once I did and said, hey, I've got all the tools I need right here. So I need to use what I have, and it worked great. So journaling is very, very, very important.